So in this instance, if we ever come across a ranging area of price action like this, we are most often than not, we are looking for a breakout and a retest of the top or the bottom of that range before we take that trade, not a break of structure trade. Okay. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now session. An hour earlier than normal. Good afternoon to you, HC. Good to see you, buddy. Hope you're doing well out there. Pouring an absolute storm here in the city at the moment. It is horrendous weather. Absolutely horrendous. And it's all good. So, this afternoon, nice and relaxed vibes. We've got Christmas closing in, and we are going to take a look at entry criteria. Now, this is not going to be a strictly formal workshop, as they can sometimes be throughout the year. This is I definitely want to run this a little bit more of a relaxed environment. I've already sent out a message, but for those of you who will be catching up on this over the course of the next few hours and then into the evening, I do appreciate that many of you at the moment are away on holiday and with your own friends and families, traveling, or also I know a couple of you are at work and you couldn't make the 1 hour early session at 12:30 GMT. So don't worry, this session will be obviously available later on. So if there's any questions or anything, please let me know. Please fire them out in, as and when they come up. Don't hold on to a question for the sake of wanting to interrupt the session. Questions are good, and ultimately you will take on a lot more information if the questions are asked as and when, and then I can get to answering them for you. In real time, which is what it's all about. Good afternoon to you, Devson, as well. Good to see you, buddy. All right, so we're going to have a look at entries then. So ultimately, entries in our trading system, they are the same across the board, no matter what time frame we're trading, no matter what asset we're trading, whether it be equities, fixed income, FX, indices, commodities, it's all the same. So a chart is a chart, and I really like that. I really, really do. I love the fact that all the skills that we ultimately work on with the IO kind of methodology and thinking about things like commercial institutions, they are transferable. So it doesn't matter what you go into down the line, you are looking for the same exact pattern across every single market out there, which is great. And ultimately it means that you can be very, very adaptable. So long as you have a chart in front of you, you're going to be able to break it down. You're going to be able to action positions on it, which is really, really good. Now, ultimately the entry via the break of structure is the most prevalent. We obviously have the break close and the retest, which we can add in as an additional confluence, which is ultimately and primarily its function. That is the function of the BCR. So first of all, if you wanted, you could trade every single trade as a break of structure trade. It's not really a case of, you took a trade that didn't have a BCR, that should have had a BCR, so you messed up. You didn't get the process right. That's not really what we're trying to do or to explain. Every single trade you take could be taken with just simply a structural breakout, but it's when to and when to not use that form of entry because of other factors at play within the trade that we're looking at. Some trades are going to carry more inherent risk. Some of the positions that we're looking at are going to have particular technical risk factors as well as fundamental risk factors that may, not, I don't want to say force our hand by any stretch, but they would require a little bit more efficacy and possibly even delicacy, I suppose, with our approach to them. And a BCR really does give you that additional criteria to say, look, where we've waited, you can see the commercial interest has come back down to retest this particular level. The market is continuing to trade with the trend, either bearish or bullish, and so therefore it's all looking really good, and that's the kind of thing that we're after. Whereas most of the time, 90% of our trades throughout this year have been just simply breakout trades, which is actually crazy if you think about the difference between the number of breakout trades versus BCR trades that we've had. I mean, it's a real striking difference between the two numbers. So, I mean, we can look at any asset. This Aussie NZD, I was already looking at this before coming online today, and it's got some really nice structure to it, and it would be really good for the benefit of going through a few examples. So, for example, in the Aussie NZD, let's say, we look at this bit of price action here, really nice bullish bit of price action, and we've got some similarities between the impulsive and corrective waves. Now, if you don't know already, your impulsive and corrective waves are essentially the market moving up and moving down within the trend. And this is what makes up a trend overall. So that's what I mean when I'm saying that. Now, if we look at the points of liquidity, we can see these as well all over the place. And we can just plot these out over and over again. These are quite easy to see, I suppose, easy to pick out if you know what you're looking for. And the break of structure entries are all over the place. So like this area in here, for example, this one is a breakout, even though it's a loss and the market comes right the way back down again, it is still structural breakout. This here is a starter breakout before we get the break close retest and the continuation. And this here is another breakout. So we can see that the market is breaking free of these structural points, which generally, not every time, but it generally leads to a continuation of momentum in the direction of the overall trend. And we can see this in bearish form, we see it in bullish form. It doesn't make a difference whichever way you're going. But then if we remove the breakout points, we then get break closes and retests as well. So the BCR, for example was there. So we get the fake out, the market comes back down, continues to range, which is where liquidity is filling into the market. This is where lots and lots of orders are coming in, filling into the market, and then we end up at the end of it with this area. So everything inside the red circle here, which is ultimately the breakout, the close, and the retest, which is the B, the C, and the R. And then we have a really nice big institutional candle. Now, this candle is different than all of the candles that sit between in this range. And the last time that we had a candle like this was in this area in here. And this is also a nice big commercial candle. So this is where a lot of commercial interest is taking place, which means big banks, hedges, you name it, are all in there ready for liftoff. And the money that they've been putting into the market has been flowing into the market in this area. So this area, so we imagine this. Commercial interest comes up to this area. Lots and lots of orders are in the market. So this is where the first half, you could say like from here in this area, is profit taking. And then in this area is where fresh orders are hitting the market. We have the little ups, the little downs, and lots of money is coming into the market getting ready for the next leg, which is where it's confirmed via the break, close, and retest, and then that next nice big commercial move to the upside. So in this instance, if we ever come across a ranging area of price action like this, we are most often than not, we are looking for a breakout and a retest of the top or the bottom of that range before we take that trade, not a break of structure trade. Okay, and this is where we have to be quite careful, quite precise with what we're doing here. And the reason we're looking for the break, close, and the retest outside of the range is because this confirms positive imbalance of price. Now, positive imbalance of price is where we have price equilibrium, equal numbers of buyers and sellers, leading to a breakout above the level up here, which means the price now has more buyers than sellers, ultimately leading to the takeoff, which is where the price action gets the breakout, the retest of that level to make sure that we're not going to actually come back down and it's not going to be another fake out like this area, but in actual fact, we are continuing that move to the upside. And so this is why the break, close, and the retest in this particular element is so important. And as we can see here, obviously, market absolutely fires up and we get this really nice big extended move right up to the highs there, 114.15. So really, really nice example there of how the BCR is used. But let's step away from the BCR for a moment here. And let's look at a area of a structural breakout, right? Because if we think about this area in here, we've got that area there, and we have the ceiling there. So as we can see here, we've actually got a candlestick pattern right slap bang in the middle of these areas. We don't have an equal number of lows down here, so it can't be called a range. Can be confirmed as a range. We have an equal number of highs though, don't we? So we have a rising wedge. Or alternatively, we have a pennant. It could be a rising wedge in a different context of the market. It could also be like a pennant, kind of similar to a pennant. But what we're looking at here is just a simple breakout of this area, because imagine you've got this area and you're squeezing in. I know this is a funny analogy I'm going to use, but it works really well. Imagine like your kids' Play-Doh toys, right? I don't know if you've got kids or not, but I'm sure some of you out there do have kids who are going to be watching this. And you squeeze in as much Play-Doh as you can to the handles, and you squeeze the handles together, and it pushes the Play-Doh out either the top or the bottom, right? So this is just the same thing. It's squeezing in as many orders as possible into this pinch point when eventually it's going to pop and we get the big push or the big drop at the end of it. Now, there's telltale signs as to why we knew this was going to be a bullish breakout trade and not a bearish one, and that's because we have a series of higher lows being formed. We don't have a series of lower highs. If we did have lower highs, then of course we would be thinking, okay, it's going to be bearish. The breakout's going to be a drop and not a rally. But in this case, it's quite clearly going to be a bullish breakout because we have the higher lows being formed down here, equal number of highs leading to the end, which is where we get the big push. And this is a perfect setup for a breakout trade. We don't need the retest of this because this is not an area where orders have been necessarily filing into the market. We are still within the overall move from where the orders were filing into the market in here, where the market ran sideways for a period of time. And so this is what changes the context. We don't need the BCR, and we can just get that simple breakout. Now, of course, there's a couple of other things to consider here, isn't there, between BCRs and breakout trades, breaker structure trades. Number one is the fact that you are more often than not going to be making more money on a breakout trade like this. Now, I know, there's going to be a few eyebrows raised. There's going to be a few, eyes glistening with the thought of extra dollar bill signs. Of course there is, but it's not straightforward. Now, the risk reward ratio will increase with a break of structure trade, and you will be able to get better risk rewards using a break of structure on any particular asset at any particular time because of the aggressive nature of the entry and not having to wait for that breakout, the close, and then the continuation. Because in this context here, we wouldn't have been able to get into this trade idea until the structural breakout there at 112.82. If this was a break of structure trade, that would have been, well, there, for example. That would have been the structural breakout. This would have been the next point up, and we would have been ended up with a very nice, 1 to 4.7 or something. Whereas it's a break close and a retest trade, which means we have to get in above the previous retest high, which means at the very earliest convenience, we're going to be able to look at a trade idea entry at 112.81, which means with a trade at the exact same stop is going to yield a 1 to 2.28. So a significant drop in risk reward ratio over the break of structure. But with taking a break of structure trade, you are looking at reduced probabilities and successful completion. And that's the main thing, because you're not waiting for that additional commercial confluence to be on side. You are getting in as soon as you think the commercial players are ready to go, you are getting in almost right next to them, not really behind them. A BCR, you're getting in behind the commercial players and you're following their footsteps. Break of structure trades, you are moving with the commercial players. Obviously, we're always going to be moving behind them to a certain extent, but the break of structure, much more aggressive in nature. It's more like we're sort of huddling right behind them, rather than the BCR, which is a gentle stroll, like a quarter mile back. Now, in terms of a variety of different trade ideas, what we'll do is I'll go through and we'll look at some various setups, and I'll just cleanly tell you what is what. So pound Swiss, of course, like this area in here, for example, if we wanted to trade this, we would be looking at this as the high in here. And then this area is the trade that we would be looking to take. So break of structure trade, which would place us there. And then we'd be going back in time, looking at the potential target profits. For example, that one there is a decent TP. We'd have our TP up at the highs there. The stop loss we would have, possibly down here at a 1 to 2.5. And that's your trade. But after the trade is completed, of course, we then get the price action pullback, which then creates the B, C, and the R of the process. And if you go back through, I'm not suggesting you do this, but you can. If you go back through any of the trades that we've taken over the course of the last year, and we look at some of those breaker structure trades, which we've done so many of, you will often see this. It doesn't matter the asset, but a lot of the time when we're taking those BOS trades, about maybe, it could be anywhere up to, 6 to 8 hours after, we'll see a retest of an area that we were actually trading the breakout of. Because it always happens. The BCRs always happen, but we're just getting involved in them before that part of the process takes place. We check out the indice markets up here. Let's go to the Dow Jones, for example. We'll see some more evidence of this. So, we've been ranging for ages here, but for example, we've got the break of the range. We could be looking at, breakout of the range there, for example. We've got the breakout. The market comes up. We've already taken our profit and ran, and bang, there goes the retest. Back down to test the top of the range that we've just been looking at examples of in Euro Yen in the Aussie NZD. Yeah. Again, we've got more breakout examples down here. So the market comes right down to this low. It comes back up. We form what I would say is because this is a bit of a complex one to navigate. But we've got the lows sort of down here, I would say. So I would ignore the wick below this point, but look at the close and the open of the bodies of these candles. And then look at the highs of those candles as well. So the market's coming down here and sort of, relaxed in this state for a little while, whilst orders are filing into the market. And then we're looking at this kind of thing really as the breaker structure point. Now, this one is, as I said, a little bit more difficult to navigate because, of course, we have this level as well, which is directly above, which you may want to use as your breaker structure point for the continuation. Nevertheless, the market has this weird and wonderful candlestick, which is a US Open candle on Friday afternoon, which then rallies right the way up to a high of 32.60 and then goes all the way down to 31.91. So if you're day trading in this context, you probably would have got a successful trade out of that. I mean, that's quite long. Remember, this is a 4-hour chart. But it's not guaranteed. It can't go back that far anyway on a 4-hour, on a 1-minute time frame to look. But after the fact, we do get the continuation, and the continuation exceeds previous highs. Comes all the way up there, doesn't it, to 33.35. Let's check out the NAS 100. So, for example, on this one, we've got this area in here. So we come down, we've got low 1, 2, and 3. That comes back to be retested, but we probably would have got in just on the breaker structure there. And that would have been our trade. I mean, we'll be able to see this on a 1-minute chart anyway, that one. Let's go back and time it for a moment. Yeah. See, there is that move. So the market comes down on a 1-minute time frame, we get a retest anyway. And then it drops right the way from 25.34 all the way down to a low here at 25.11. So that, for us, is a solid trade. Lots of breaker structure points around here. Loads and loads of them. Let's go up to daily time frame, consolidate some of this data. You'll be able to see areas of this taking place all over, like that, for example. So we get the move down, we stall at the lows. So now what you're doing is you're ultimately waiting for a high, an opposite colored candle, to break this candle, to break the top of this candle, wick included. Right, so don't worry about these two, but you're looking for the bullish move to exceed the previous high of the bearish candle. So that right there is a perfect example of that taking place. On this one, the wick is so extended, you might want to consider down at the lows because it's the daily time frame. So the close of the candle there, body breaks it, rallies right the way up to match the previous day's high. I mean, that's a trade right there anyway. That's not bad at all. We got a bearish one right in there. Got a bullish one right in here. This area in here is prevalent. It's directly above price. So you may consider saying to yourself, well, that area there is directly above price action, so I'm going to wait for the conservative approach. That's conservative. This is aggressive. You've got both options there. Got another one in there. This one's interesting though. So you've got the breaker structure, which is up at the highs. Okay, so this is the anchor point, let's say. You've got the break close retest, but actually you've got this area down here as well, which is also a breaker structure. And if there's enough margin between these two areas, then you've got a trade idea there, don't you? That's a successful trade potentially there. Looking at this candlestick, probably not, but the margin is there to trade it. One is aggressive, one is conservative. One carries more inherent technical risk than the other. But on the flip side of that, you're going to get a decreased risk reward ratio by taking the BCR over this one. So it's all a game of math as well. You have to take all the numbers into consideration. The breaker structure is more aggressive and therefore more risky. But your win-loss ratio will take a bit of a beating as a result of it. However, it's going to generate a higher risk-reward ratio overall. So this is where trial and error just comes into play. And also, the better you get, or let's say the more efficient you become at being able to source where the money is in the markets, is going to greatly impact your success rate of using breaker structures versus BCRs as well. BCRs are very, very good in the early days and years. Very, very good indeed, because they require you to be patient and to pause and to think. Whereas the breaker structure trades, they're quite like hip firing. It's quite a hip firing mentality. But both have their pros and cons, and it's good to be aware of them. So yeah, and that's about it, really, guys. I mean, to be honest with you, I can chew the fat on this subject I could do it every single day. I can chew the fat on this subject, but it also needs a bit of a two-way stream of conversation. And I know loads of you at the moment are away on holiday and also working at the moment, unfortunately for you. So it's a difficult one. But I appreciate you guys who did join in today. Do you have any questions or anything? If not, no problem at all. I'll let you get back to your Bailey's coffees. No? All right. All right, team. Well, listen, I'm gonna leave things there then. Don't forget that tomorrow at 12 noon is going to be the big key highlights of 2025. We're going to be thinking about everything that we've managed to achieve, going in the final numbers of the fund's returns this year as well, which frankly have been quite extraordinary. Very, very, very pleased with that. And going to be considering a few things up and coming as well. And also, obviously, having a little bit of having a little bit of a joke around and a mess around before Christmas, lighten the mood. So, yeah, I look forward to catching up with you then. Have a good one, guys. Take care of yourselves out there. Have a great day today. And I look forward to catching up with you tomorrow. Remember, 12 noon. All right? See you then, team. Bye-bye.